Here on the Transparent FX Academy, every day I share my best market breakdowns, showing you guys how you have to analyze the market both from a technical and in order flow perspective to see where you can be looking for the next potential opportunities in the forex market. So without further ado, let's go straight to the charts and see which is today's pair. In today's video, I want to speak about AUD and ZD. Now, why do I want to speak about AUD and ZD? Because at the moment, we do have quite interesting price action and structure for a potential move. So as usual, I will be providing a complete multi-time frame top-down analysis first. I will be covering the technical aspect of this market. Then we will go and see what we have from an order flow perspective by checking the commitment of traders, which is basically what the non-commercials, so the biggest speculators in the market are doing, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to identify where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what do we have? Now, here in the monthly, we have a market which at the moment is testing a quite strong monthly resistance zone. In fact, we can easily identify how exactly from here the market started all this move to the downside. Then we had a break above the zone, and at that point this previous resistance was supposed to be turned support here. However, the market failed in respecting this area as support, broke back down, and at this point this previous resistance was once again turned resistance here. And we do expect this market to provide a rejection to the downside, possibly even for the creation of a lower low. So here in the monthly, everything seems quite bearish, and we do expect the market to provide a nice move to the downside to also print this regular head and shoulders. Going down on the weekly time frame, what do we have? Now here in the weekly time frame, things get very interesting. In fact, we can easily identify how the market has extremely strong weekly demand at this zone. In fact, we can see how exactly from here the market had started this move to the upside, and at the moment this area is once again acting as demand and support since the market is trading above it. So there is definitely the possibility to see this market provide a nice rejection to the downside to go and test this demand before then providing a rejection to the upside. So also here in the weekly, everything seems quite bullish. We can even see how the market has created this candle here, which is a candle which usually the next candles are supposed to fill in the wick. This is a pattern that the market does create quite often, and it has a quite high completion rate. So usually after you see a candle like this, the next one is supposed to fill in the wick, and in this case the wick fill would go and test this very strong liquidity zone, which the market anyway is supposed to test before providing a rejection to the upside. So here in the weekly, we do expect a potential rejection to this area before then seeing a continuation to the upside. Just a quick thing, make sure that you like and subscribe, and also let me know in the comments the topic that you will like in the next video. Going down on the daily time frame, what do we see? Now here in the daily time frame, we have even more confirmations for a potential rejection to the downside. In fact, we can see how in all this impulse to the downside, there is only one candle which is not related to the move, which is exactly this green candle here, meaning that in creating this move to the downside, the market at this level has created structure. And now that the market has broken this structure to the downside, this is previous support turned resistance. And as the market is testing this previous support and resistance, we definitely expect the market to provide a potential rejection to the downside, and we also expect for the market to provide a lower low. Now, in general, in this situation, if you have an impulse and a correction, you also want to measure the correction. And if we measure it by taking our Fibonacci from the high to the low, we can see how the market just reached the 0.786 of the Fibonacci taken on this daily impulse, which is a quite strong resistance zone that we do expect the market to reject to the downside. So how we will be approaching a potential shorting opportunity here with students. Now, before I show you that, let's first go and see what we have from a COT perspective. So commitment of traders, which is basically what the non-commercials and the biggest speculators in the market are doing. Now, starting here from the AUD, we can see how lately net positions have been dropping massively. We went from having 12.2k net positions with 54k longs and 54k shorts and 66k longs. So definitely more longs than shorts. From an institutional perspective, to having 78k shorts and only 53k longs. So way more shorts than longs. So the AUD is getting extremely weak. And the NZD is definitely not getting weaker than the AUD. More or less, net positions are remaining the same. We do see some decrease here, but nothing massive. In fact, we don't see a lot of shorts getting opened. So definitely the AUD is getting way weaker than the NZD. So more continuation to the downside here is definitely possible. So how we will be approaching this potential shorting opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily combined with the COT data are the best time frames when it comes to the directional aspect of the market. But when it comes then to confirmations and entries, the best time frames are the 4-hour and the other intraday time frames. So with students, we will be monitoring price action from a 4-hour perspective and lower inside of this area, waiting for the market to shift from a 4-hour bullish market, as we will have, to a 4-hour bearish market. And as soon as the market will shift from an intraday bullish to an intraday bearish market, at that point, we will be adding AUD and ZD to our watch list. And as soon as the market will provide to us one of our valid entries, at that point, we will be taking a nice short with a good risk to reward and good probabilities at that point for a potential move to the downside and for the market to complete this impulse correction and impulse pattern to the downside, and possibly for the market to even provide and create a lower low. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also click the link in description that brings you to the mentorship program. It's a very complete program. First, you learn all the rules of my rule-based strategies, and then you trade the strategies with me. Every day, I give you a new daily market breakdown showing you how to apply the strategies with the entry, stops, and take profits. And you can also ask questions and get the answers the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.